could see a lot of hot rippers. But if the Nasdaq gets rejected at 13,000 or at 13.5, we're coming back down again. Now, even though the Feds went soft, there's still really not any good news in the Nasdaq. Okay, let's start with the weekend. If there's anything interesting that come out of there, but that's garbage. Uh-oh. Guys, if you've been following me, what has my prediction been this whole time this year? What a Fed pivot would mean for markets according to J.P. Morgan. Peaking inflation forwards could lead to Fed pivot. The Feds are going to reverse course. J.P. Morgan Chase is now calling it. Chase is calling it. This is such an obvious call. But the only reason why I'm so early on this call, I don't know when I started saying this, that the Feds were going to reverse course. They were going to be forced to, but I've been saying it all year. And now we are starting to get news headlines that may be the case. But it is not hard to figure this out and make these calls because it's common sense. When the government is in tons of debt, when the Federal Reserve is in tons of debt, any interest rate hikes are going to make them, as well as the rest of the U.S., including all of us, pay more interest rates, higher interest rates, which means that it is impossible for the Feds to pay off their $8 trillion in debt and the government to pay off their $30 trillion in debt. And with this last soft rate hike, not even a whole point, that showed the Feds could not even raise it a point. They cannot raise the interest on the Fed debt, on the government debt, a whole point. If they would have, they would have done it, and they didn't. So obviously, at this point, inflation has been out of the bag, as I've been claiming. We've been in a recession since Q2. Now I'm seeing Meet Kevin and all these other YouTubers coming out saying, we're going into a recession. You are so late. Shut up. You were so late. These YouTubers that are just now coming out calling for a recession, you probably shouldn't follow them because it was obvious it was going to be a recession 4 months ago. So, but do what you will. You know, like I always say, go watch other YouTubers and see what they're saying. But more than likely, you're not going to be getting any type of accuracy because nobody else, I think, on anything has called out the Feds would reverse course like I did and like I have been for a while. So now that the headlines are coming out, the Feds are going to reverse course. It's probably going to get pretty obvious that the Feds are going to reverse course. It only made sense because October, right before the election, this is a big election, and both sides, Republican and Democrat, do not want a trash stock market, nor do they want people mad and struggling and gas at $6 because you've got to go out to the polls and vote. Unless you do mail-in ballots, but that's a whole thing. We're not even going to get into all of that. But it was obvious. It was obvious this pivot was coming. I don't know why it's taking people so long to figure this out. I don't know why J.P. Morgan is just saying it, but it was obvious. Super, super obvious. All right, let me go back through the rest of this news, and then we'll look and see if there's any trades for today. Right here. Look at that. How to position your portfolio when the Fed, stock market investors differ on recession calls. Megan Hornman at Verdant's Capital Advisors isn't convinced the bottom is completely in. That's what I've been saying because they've been doing quantitative easing since 2008. I'm looking, right there, second quarter GDP data, which we already covered this, shrunk by 0.9% on an annualized basis in the 3-month period from April to June. So the GDP shrinking, high inflation, recession. And this has been going on all year. So It's so funny how late all of these people are. All these big analysts, all these big YouTubers, JP Morgan Chase, y'all are so late on this. Everybody is so late on this. Except for us. Or at least the ones who listen to me. I know some of y'all do not listen to me, but still enjoy coming in and trolling me. But, hey, it is what it is. Let's see. Things you never knew about annuities. Yeah, there's going to be a bunch of nonsense in that. Most investors still don't understand the relationship between risk and return. Study reveals. Well, I didn't need to do a study for this. We know 90% of day traders fail. And that would mainly because of their risk and return. You're going to fail at day trading if your risk is higher than your return. That's why I always say I'm looking for a 1 to 3 or more ratio. I'm not looking for a 1 to 1.5 ratio or something that small. I want bigger profits. I want to risk 10 cents to get 30 cents, 1 to 3, or 10 cents to get 40 or 50 cents. 1 to 4, 1 to 5. That is what I'm looking for my risk and return. So yeah, obviously, this is, God, I've been on a warpath for the last week. I know I have, and we're gonna get back into trading and everything else. But I'm so sick. I gotta call out all this nonsense. There's so much nonsense coming out. But yeah, this was obvious. This is nonsense right there. Let's see. Are retirees worrying about the wrong things? I don't. What are they worried about? Let's see. In retirement, you're going to face many risks, such as outliving your money, investment losses, unexpected health expenses, unforeseen needs for family members, and maybe even benefit cuts. The whole reason why I'm against 401ks and trying to hold money forever. There's no point. If you are putting a 401k or you're putting your money to the side. And Reliable Rudy, our new member to the Framework and Fortune Media Network, completely disagrees with me. So if you think the long-term routes are the best routes, make sure you hit his channel up. And as he's covering a lot of things like Roth IRAs. But me personally, I hate seeing my money sit for 30 years. You don't know what's going to happen in 30 years. And this, even though this is an article, they're saying the same thing. In retirement, you're going to face many risks. So your risk initially for your 401k or your long-term portfolio, your risk, your stop losses and all that is not the same risk that they're talking about here that in retirement you're going to face. Besides your stop loss risk, your ratio risk, you are going to be old. It's going to be 30 years. You can't tell the future. Oh, one thing, matter of fact, let me go ahead and cover this. Let me go ahead and cover this real quick because One Life has said this multiple times. And I've heard other people talking about it lately. I want my money in the bank because it's FDIC insured. FDI means the U.S. government agency is providing the insurance. If the government has no money, if we are $30 trillion in debt and we cannot pay the interest, where are they going to get the money to pay your insurance? This means absolutely dick for all of you out there who think it means something. You're not safe because your money is federally insured. The feds are broke. So what is it insured by? Gas cards? Are they going to give you gas cards? Is that going to help? No. When we're in this type of fall, in this type of empire collapse with the currency and everything else, FDIC is not going to mean a thing. So if you think you are safe, if it makes you feel better to keep your money in federal insured places, sure, do it. But it's not about your feelings, it's about the reality. And the reality is they ain't no money. There's none. There's none whatsoever. So you're FDI insured for nothing. There's nothing to back it other than the government's word. Which, if you don't like the Democrats or you don't like the Republicans, if you dislike half of the government, then you distrust half of the government. So that means you automatically, by default, distrust half of the FDIC because it's the government. So when you're arguing for FDIC and you don't like the entire government, well, then you're defeating yourself in the whole argument. Because why would you want to be Why would you want to be insured by an entity that you half like? Okay, anyway, so let's go through the rest of this. Let's see, will you outlive your 401k? So, yeah, you're going to outlive your 401k if the stock market crashes and all that, of course. That's why I keep saying, like, 30 years, 40 years for a 401k. You don't know what's going to happen in 30, 40 years. All right, so let's see. San Francisco, footprint, a bigger 9 billion cloud. I don't care about San Francisco. Money investing tips, blah, 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 nonsense. Amazon could make improvement to help future earning results. Amazon offers, okay, we know what Amazon is. They didn't have to put that in there. Okay, so this is just this guy's opinion on what Amazon could do, so screw that guy. Nobody cares what he thinks. He doesn't run Amazon or even a part of the company. U.S. in a recession? U.S. in a recession now. Not yet, and here's why. Not yet. At least not officially. Okay, yeah, exactly. Keep talking crazy on these news things. I'm going to go through this and dispel this whole damn thing really quickly. The official scorecard for the U.S. economy contracted in the spring for the second quarter in a row, matching an old rule of thumb for when an economy is in a recession. That's not an old rule of thumb. That is how economics works. That is how Austrian economics works, not the BS monetary theory and the Marxist economics, which, if you follow Marxist economics, you literally fall on somebody who's broke their entire life. So, I don't know why you'd want to do that. But that's not a rule of thumb. That is how economies work. 2 quarters in a row, according to them, high inflation, shrinking GDP. So we were already in a recession, like I've been saying. I guess I was going off the old rule of thumb of just regular economics. The old rule of thumb. Is the U.S. really suffering its second downturn in 3 years? Dumb question, obviously. Is the U.S. in a recession? No, not at least officially. Yeah, well, you just said up here what a recession is, and then you're saying, well, because Biden or because Jerome Powell haven't come out yet and said it's a recession, it's not a recession yet. So if you're sitting around waiting for somebody to declare a recession, somebody in power to declare a recession before you start preparing for a recession, you may be waiting. Well, you obviously are waiting till it's too late. And as I've already pointed out, we are already in a recession. So, okay. Are we in a recession now? Almost certainly no. And here's his reason why. Job growth has averaged very strong 375,000 over the last 3 months. Businesses continue to invest, and consumer spending and household incomes are rising. Consumer spending is not rising, and household... Okay, so here's the thing. Here's the problem with this. This is what I've heard every analyst, every economist talk about right here. And even Jerome Powell said this, and I'm going to point out why this is so wrong. Job growth has averaged a very strong 375 over the last 3 months. First off, they are pretending like they forgot they shut down the whole economy in 2020. So many jobs were lost. We are not back to job levels before the pandemic and before the lockdown. So this is not strong. This is just people getting their jobs back or businesses hiring people. But if you go out in the world, in reality, and drive around and look, plenty of businesses out of business, plenty of places with now hiring signs. So that is not very strong. That is nonsense. All right. Then consumer spending and household incomes are rising. If The consumers are spending in US dollar and their household incomes are in US dollar and inflation is rising, then yes, of course, it's going to show spending and household incomes are rising because it's in US dollar and the US dollar is going through massive inflation. That's why. It's not because people are actually making more money. It just looks like they have more dollars. If they even do, which I don't even think that's the truth. But these numbers are fake numbers because it's not including the inflation. So this whole thing, okay, God, how do you explain the first half of 2022 the same way that I've explained it all year? GDP is complex and sometimes bewildering. No, it's not. GDP is the amount of money that we make as a country. Simple enough. The money coming in. Economics is simple enough. Money coming in, money going out. So GDP is money coming in. Exports is money coming out. Loans, bonds, all of that. IOUs going out, still money going out. That's all economics is, money going in and out. Very simple. The whole macro, micro, all of that is just academic garbage trash. All right, hold on. I see some, okay, we're getting some important news here now that I can start covering. Gold and silver prices continue to climb. Yeah, silver went really nice rebound last week, $2 in like 2 days, which is huge for that big of a market. 10-year treasury ticks higher. So longer dated treasury yields tick higher to start the month, with short-term rates fell as investors waited prospects for a recession. Rising fears of a recession were cited for knocking down yields last week. Let's see, hold on here. Jerome Powell said another 75 basis point move could be considered in September, but that would take a data-dependent meeting-by-meeting approach to decisions. So, Jerome Powell himself is not even confident that they're going to do a rate hike in September. What's right after September? October. Remember that month. Let's see, he also warned the economy would need to see a period of below-trend growth to rein in red-hot inflation, and the path to a so-called soft landing for the economy continued to narrow. Oh, so the soft landing's out the window now. We're going straight on, just straight on crashing into the ground. No soft things to save us, nothing. The fact that they're saying it's continued to narrow, it means it's impossible now. That's what they're saying. And he even said, whoever wrote this article said so-called soft landing. So nobody's believing the Fed. The 2 versus the 10-year measure of curve lessened its inversion as rates at the short end fell more sharply as investors scaled back in expectations. So Friday we have a jobs report coming out. We'll see if that jobs report actually means anything. Non-farm payrolls and other employee data will be parsed for signs a still strong labor market is beginning to show cracks. The labor market is showing cracks. That's because the labor market was already cracked. There was never a strong labor market. All right, well, everything that I have been calling out. Well, wait a minute. Hold on. This is big on oil. Let me read this. Both international and U.S. based, blah, blah, blah. Oil traders are focused upcoming meeting of OPEC. And this is Wednesday. So Wednesday, let me pull up my Google Calendar and add this to my calendar because that's going to be real important for oil, what OPEC decides, because OPEC pretty much owns most of the oil production now since we signed back into OPEC. Signing back into OPEC was one of the worst things that Joe Biden has done. Or not him personally, but this administration, because we know he hasn't done anything. He can barely get a pudding pop down without dying. So Okay, let me pull up my calendar. Like I said, I want to add this so I don't forget this so we can cover it. Wednesday is going to be an interesting day, so it looks like I'm going to be live streaming Wednesday and Friday to cover these meetings. Because at this point, every single thing is going to be important to how this market reacts to see if we do have some type of rebound. And it more than likely, knowing OPEC, they're going to come out and raise gas prices or do something to raise gas prices. OPEC never lowers gas prices. They never lower oil. So we'll see. We'll see what they come out with Friday, but that is something important. I want to put on my calendar real quick.